Bitcoin has rallied to new all-time highs, and it's clear that we are in an accelerated cycle, something many people are calling a left translated cycle. So in today's video, I'm going to be sharing my thoughts and perspective on this left translated cycle in more detail. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. So historically, we've seen an 8-degree macro diagonal trendline resistance develop in each cycle, and we tend to see, or have tended to see, certain price behaviors at certain points in time. So for example, in the pre-halving period, we tend to reject from this macro diagonal resistance, but only after the halving we tend to then turn this resistance into a new support. This black circled area here showcases that this retest does successfully occur, and that sends us to new all-time highs. And we get to those new all-time highs at the 215-day mark after the halving. And this is essentially what happens also in 2020. Throughout 2019 to 2020, Bitcoin was rejecting steadily and frequently from this macro diagonal trend line. And then only after the halving, lo and behold, a black circled successful retest of this trend line enables a breakout to new all-time highs. And this breakout to new all-time highs occurred 214 days after the halving. So it's very clear, 214 days after the halving, we break to new all-time highs, and the macro diagonal resistance is an important reference point in that. So we can see here that we've accelerated quite a bit. We've definitely accelerated 214 days because we've already broken to new all-time highs some 40 to 45 days before the halving. So if we have this 45-day period before the halving and then add on to that 214-day period after the halving, where we should have technically, according to history, broken out to new all-time highs, we come up with an acceleration of 260 days. So this now changes how we should view things, because we've been looking at the halving as that really important reference point for cycles. We've been doing that for many years, but we're still probably going to continue to look at those recurring tendencies. However, it's better to look at old all-time highs as that reference point. And we'll be talking about that in just a moment, because we'll be talking about first how this acceleration and 260-day acceleration, how is that impacting where we could see a bull market peak in the future? Because historically, according to the halving cycles we've been analyzing for a long time now, Bitcoin has historically topped out after the halving 518 days or 546 days after the 2020 halving. So it gives us a range of 518 to 546. So if we're actually now accelerating by 260 days, that essentially cuts this time in half. So that's something to really take into account, because if we saw history repeat and Bitcoin break to new all-time highs 215 days after the halving, we would have probably got something like this, where we top out potentially in mid-September or mid-October 2025. However, we're no longer using the halvings as reference points. Instead, we're looking at old all-time high levels as that reference point for where could Bitcoin potentially peak in its bull market. And in 2013, it took 266 days to break to new all-time highs, or at least to that bull market peak after breaking beyond old all-time highs. It took 280 days in 2017, so you can see that this is essentially that 280-day period where we rally to new all-time highs and that final bull market peak. In 2021, this was a little bit longer, 315 days. And here's my next point, which is quite interesting. We're seeing an acceleration in this cycle by 260 days. That's clear. So that essentially cuts this time in half in some way. So with that in mind, 260-day acceleration, it's important to note that we may be having lengthening beyond old all-time highs. So in other words, maybe we're seeing acceleration before old all-time highs, but we might be seeing lengthening beyond old all-time highs. So you can see that in the past, 2013, 2014, we broke to new all-time highs. We broke old all-time highs, and until the bull market peak, it took 266 days. In 2017, we broke old all-time highs and rallied to a bull market peak 280 days later. And so you're seeing that in 2021, this is 315 days. So we're seeing a lengthening in the amount of days that Bitcoin is spending beyond old all-time highs before finally performing its bull market peak. And so the question here, first of all, there are two questions. Where could the Bitcoin bull market peak according to this new theory of measuring things from the moment we break those old all-time high levels? Well, if we were to look at history repeating, it comes down to a range of 266 days to 315 days, which means that we could peak in late November 2024 or late January 2025. However, we have to take into account that maybe there is some lengthening in the amount of days spent beyond old all-time highs before bull market peaking for that final time before entering a macro bear market. And really important to maybe try and understand the lengthening here, because this is a lengthening of 2 weeks from here to here. This is a lengthening of a month, just over a month. So are we lengthening by 2 weeks in this current cycle, or are we lengthening by just over a month, or are we lengthening by just over a month plus 2 weeks? So that really does push this potential bull market peak then maybe into February, maybe even into March, at the latest April. So if we take this lengthening into account, it comes down to a period where maybe it isn't going to be December 2024, January 2025. Maybe it's going to be early 2025, the first quarter of 2025, where we could be in late January, maybe mid-February, maybe early March, mid-March. And it's very difficult to try and anticipate how much we could see lengthening in this time. But there is some sort of already 2 weeks to 4 weeks, 5 weeks. Could we see a lengthening in 5 weeks, 6 weeks maybe? So that's where it comes down to a mixture of things. So it looks like we are in an accelerated cycle, a cycle that's accelerated by 260 days at this moment. But at the same time, we see lengthening beyond old all-time high resistances in the amount of days that Bitcoin spends beyond this point. And so maybe there's that acceleration, but then maybe there's also this lengthening. And so maybe there'll be some sort of mean reversion in the sense that the acceleration and the lengthening is going to cancel itself out in some way. Maybe the acceleration won't be as accelerated because of that lengthening, if that makes sense. So quarter 3, or at least quarter 1 in 2025 is that moment where Bitcoin could bull market peak based on this chart. And so it's difficult to pinpoint the exact bull market peak because we'll be also using the Pi cycle top moving average indicator. But it does give us a window for dollar cost averaging out of the market from our Bitcoin, from our altcoins, from generally our crypto portfolios. Rather than trying to time the absolute peak, it's best to try and dollar cost average within this window, and maybe even earlier if you want to be on the more safer, conservative side, while still acknowledging that maybe you lose some gains along the way, but you lock in those profits that you've made throughout the entire cycle. So those are my thoughts on the left translated cycle. Thanks so much for watching. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, and I'll speak to you in the next one. Speak to you soon.